Good evening, everybody, and welcome to another edition of Live Market Analysis. It is a pleasure to be with you as we delve into the intricacies of markets for the last 5 trading days and look ahead to the next 5. Before we get started, of course, we must discuss the disclaimer, which says that everything we're going to talk about this evening is general in nature, as not taking into account personal financial circumstances, objectives, or particular needs. So before acting upon any of these very general statements we're going to make from time to time, consider them carefully or seek the help of a financial professional to determine its appropriateness for you. The other stuff, of course, is very important. You're going to lose money at some stage. If you can't deal with that, tune out. There's no point you watching the stuff we're about to talk about. We're probably going to find, given there's been a bit of a pullback in the hottest of hot stocks we've been following, we're going to find some stocks not in ideal situations. Trading is risky. Ultimately, it's you who's responsible for the stuff you do. Disclaimers out of the way. Let's get into the good stuff, which is where you ask questions. Hopefully I can give you my best technical analysis reader, and hopefully it'll make sense. And yeah, look, hopefully the market does the right thing by us, because it is a little bit of a tricky time right now. It could be anything also to do with the 3 M's of trading: money management, methodology, and mindset. Okay, with that little bit of a sketchy introduction, isn't it? Bit of stuff going on. Let us go to the portfolio management model, and interestingly, both of them are going to be FRP or full risk position. So maybe Carl's overstating a little bit, but that might also be personal experience. I'm sure a few of us have had a few black candles that have appeared in places that we'd rather not. Over the last week, there's certainly been a large black candle that appeared. Oh, look, whether it was a week ago, I don't think so. That maybe that was Friday the week before, but it's still dominant. It is the dominant supplier candle, the dominant of any candle on screen. And as you will see so many times, and if you've been listening to me for any length of time, you'll know this. We see these big black candles. They're so influential, and often the market gets stuck inside the range of that candle. I won't ask for a show of hands, but I know you've seen this, and I know you feel this. You can feel it more than anything else when these black candles appear. The market is really trying to decide which way it should go after that. I mean, what is the relevance of that candle? Who's got control? Have they got more? I mean, obviously they got, demand side got blasted, supply side's come to play. Should we fight them, or should we sort of just fall back? Think of it as an army that might be saying, well, let's fall back to a position we can defend better, and it might be the long-term uptrend ribbon. But look, the demand side is not out of it yet. We've got a pretty good candle on Friday night. That's that one there. And look, what's this? That'll be Thursday, Wednesday, Tuesday. Not terrible. Monday also not terrible. So let's call it 50-50. I mean, the short-term trend is neutralised, if only confirming that. And 22.08058 is holding, and that's the key level for me. So if we close beneath that, then we are in a supply side control market in the short term. I think that is just unequivocal if that was to be the case. So if we've got a close under here, okay, imagine a black candle coming down and closing beneath here, confirming ultimately that the demand side could not push significantly back into that range, could not go and fight the latent supply in the system. And that's really, it's as simple as that. If we don't, the probability grows and grows and grows that we'll resume the long-term uptrend. And it just looks, history doesn't repeat, does it? History doesn't repeat, but it sure as hell rhymes. And, I think we're here again, aren't we? What happened that time? And that's no reflection on what's going to happen this time. It might, you might see that, but the balance probably still lies with the long-term uptrend. Okay, Carl. Well, you painted a picture there that's very neutral, extremely indecisive, and that's what it is. Shouldn't we be managing our risk? Well, I don't think I'd be actively adding risk. I mean, wherever I'm at, let's say I'm at 84%. I don't think I'd be seeking to go to 100, which is what my current allowable limit is full risk position. So I'm going to stick with FRP, but I just don't think you're pushing that boundary just yet, so I don't see the need for it. But we're also not going to the next rung down, which is a 2/3 RP. Let's head over to the Aussie market, where I think we've got a far more constructive situation here in terms of demand side control. These two very important candles here, that one tipping the high. We got a little bit of a pushback, but hey, this is the old tin pot, so we wouldn't expect it to close a record-setting day on the high. I don't think it's ever done that in the history of mankind. I stand corrected. There's one there. But look what happened the next day and then the next day. It's pretty rare. So we're not surprised by that. And, high peaks and high troughs. It's not being dominated by that candle. I mean, we had that candle here. Isn't that interesting? God, I love technical analysis. And if the stuff that I was teaching you didn't appear over and over and over again, you should be really concerned. But if the stuff that I teach you, what did I just say? I just said these dominant supply side candles, we can get a trading range inside that candle. Look at that, just as the market's trying to figure out which way it's going to go. And there you go there. I mean, and this one went up, and I think that's really good too, to come from the Nasdaq chart, where we actually saw that one back in, earlier in the year, went down, but this one's gone up. So anyway, FRP there, let's keep things moving along tonight, because I know it's late for most of you listening. So FRP, and now we head around the grounds to see if there's anything to push us off either of those views. I should mention here 88.43. Let's say we don't close below that. That would be bad stuff. Okay. Russell 2000, somewhere in between the Aussie market and the Nasdaq, isn't it? It's certainly better than the Nasdaq, not as good as the Aussie 2 market, but is there a red flag there? I mean, that's all we're looking for. We don't have to overanalyze this. What I don't have here, I think I've got it over the other side there, is the banking indices, so we'll look at those later, but we should be checking up on those on a regular basis now. The mid caps, not so good. Small caps are beating mid caps right now. It's happening here, it's happening in America, isn't it? Let's go to France. Oh, well, that looks pretty solid, doesn't it? The French market, obviously the theft at the Louvre hasn't impacted that just yet. Nor should it. The DAX, red flags, everyone. Can you see any red flags? No, we can't see any red flags at all. Let's go to Asia. That's not good. Don't like that. Is it a red flag? No. Oh my gosh. It's just so strong. And what's even better is that there's just such a brilliant narrative behind this. Which is what's happening with their bond yields, of course, and repatriation of yen. It's the most obvious trade in the history of mankind. I must admit I'm not on this one, but I wish I was. But if there's other stuff to do. Nifty 50, but it should illustrate that you don't have to have your mind over here in Australia all the time. There are just the most obvious trades in the world sometimes. Let's head over to the local indices here to see what's hot, what's not. That's in the not camp, consumer discretionary, definitely not. And yeah, I think if you've been reading my stuff in the evening wrap for the last 4 or 5 weeks, you would know that this is now a not sector. This is a sector that fund managers are rotating out of. It is the best evening wrap in the universe. You'd also know not to be invested in energy stocks. Financials are okay, aren't they? Gold, you'd be all over that. Healthcare, I don't think you'd have too much healthcare, but actually starting to rally. Surprisingly, CSL coming back. Technology, I don't think you'd have a lot of technology, that's for sure. Again, another funding sector. That's what the word I was looking for, a funding sector, because we've got the beneficiary sector. They're the sectors that are getting the benefit of those sectors which are being sold to fund them. And we're seeing a beneficiary sector here in materials, resources, real estate, okay. Same with financials. Staples has definitely been a funding sector. Communication services has definitely been a funding sector. Utilities neither here nor there, and I think we're at the bottom of the list. Okay, let's have a look at, pardon me, base metals. Nearly said bond metals, base metals, and still chugging along really nicely in this. Yeah, global rotation back to value, back to commodities. I think commodity supply security, I think playing on people's minds, some trade-related stuff as well. And again, look, they're all narratives, Carl. You shouldn't even have said those words because demand is clearly greater than supply here. And that's all that matters. And it seems that way here, although last week a bit of a pullback in copper. In nickel, flatline, lead, flatline. Tin, still looking okay. I know it did pull back last week, but the long-term uptrend is there, and zinc actually is pretty good. Lithium carbonate, very flat, but some modest improvement towards the back end of last week. There, a couple of decent candles, surprising me to be honest, because I really thought with shadows like this and this, I thought it was going to roll back down. But yeah, better than that. Let's say it's still far from being out of the woods just yet. Let's head over to the trading view screen and we'll complete our whip around the grounds with precious metals here. If you read my Chart Watch Markets edition today, we talked about this chart here, silver and gold, and we said that there's a big supply event coming in on Friday night. Not the, if it was in end of the trend, we wouldn't know for some time, but look, it's more likely just to pull back within what are still very strong trends, but the candles are substantially credible. I mean, you cannot ignore those candles. I'd go so far as to say on silver, it's worth shaving some risk off the table. I think if you had a position here, a small amount, if it's not a third, you might go less than that. But that is a candle to be reckoned with, and it's going to take some working through of that candle. Gold is more subtle, but I still think a credible supply side event there. With gold, I don't think you would need to manage any risk at this stage because it still certainly warrants a full risk position, but silver's, I think, getting there. Now, let's look at the other two while we're here. And of course, we've got platinum, which is more of a silver type candle than a gold type candle, and then palladium, which is even more so. And it does really reinforce this idea that gold really is the main show here, and the other ones are just high beta plays on gold. I would put to you they're hardly moving on their own supply-demand dynamics, and more just on the other horses in the stable, and people just spilling out of the overflow from gold is sort of spilling into those. Or what's a better analogy is there's always that really hot restaurant, isn't there, that everybody's lining up to go into, and then there's a few other restaurants that aren't highly regarded. They start off very, very empty, and then eventually they fill up because people waiting in line for the really good restaurant start to move into the other ones, and I think that's the situation here. Okay, let's head over to copper and some of the positivity we're seeing in London not being reflected in COMEX, and that'll be again trade and Trump related. We know that his comments a couple of weeks ago about his thoughts on China have just killed that trend, and it's disappointing, but that is the world we live in. And iron ore actually was looking very, very good until those very same comments, and it's pulled back as well. Uranium, probably less beholden to some of those things, but still, actually, we've got some issues here on uranium. And I did cover this, I think, on Friday, and I said, look, whilst it's bouncing off this, we're okay, but we do not want to see it close down there, and that is another lower peak, lower trough series in this series, and I don't like the look of that. Look, it's not horrific as in we're going short, but you would struggle to, if this was a stock chart, you wouldn't be maintaining a full risk position on that, would you? So some issues there, and disappointing because uranium just cannot get its what together. Heading over to the energy complex here, and we'll just go back to our candles, and we can see very weak here on crude oil, but these are themes that are not surprising to us at all, and neither here nor there on Newcastle thermal coal nor coking coal either. Look, I'm going to say a little bit boring on some of those, and maybe some of the steam coming out of those precious metals as well. Let's head over and finish off with our analysis of the bond market. And look, we talked about obviously the Nikkei that keeps going gangbusters, and we've got another white candle here and another white candle on the Nikkei. For your reference, there's the 10s. I think maybe even some moderation there, but the Nikkei doesn't seem to bother it. We talked last week about obviously the shutdown, some fears about the US economy. I read a piece of research today that said it could shave at 1 percentage point, a full percentage point off US GDP for this final quarter. The Fed will have to cut twice this year and twice early next year, and that's all sort of contributing to this. And then we saw, compounding that, we saw a bit of a flight to safety on some scares, some growing fears that we could see a little bit of some bad debts causing a mini credit crunch here, or certainly raising fears that there could be some contagion in the US banking sector. So we can see the difference there between the big banks, B for big, just for now, and then this one here is the regional banks. And certainly looking a little interesting, a little serious, but not crashing. And I think that's the important thing there. We've just got to keep an eye on it. That's all. It's one of those things that we say, look, is this a red flag yet? I think it's got itself to red flag status, but is it something that's going to impact our risk levels? No. But I think we're seeing some of these fears. I mean, none of this happens in a vacuum. We're seeing some of these fears borne out, some of the price action in US stocks anyway. And I don't know, maybe Australia's getting a bid because I was going to say our interest rate picture is a little bit more hawkish, and therefore returns here might be better. Look, it was and then it wasn't. I think there's just a general risk aversion tone coming into the bond market, and we're not seeing any of that fears about the de-dollarization coming into here. So it's just that. I will reiterate that we don't want to see a precipitous fall here. We don't want to see it. It would be bad, but if it's coming from here, it would coincide with this, and that's what you need to keep an eye on. That's all I'm trying to do here is just give you those things that you can keep an eye on until the next time we have this chat. And that's it. I'm not going to do Bitcoin this week. I'm not going to do Ethereum because I find them thoroughly uninteresting. Let's go to your offline requests, and we're going to go to I don't know, does anybody find them interesting? And you're obviously welcome to your view, but I'm going to go here. Roscoe, thumbs upping that. I sold my crypto on that first move. It got to 107 or something, or it broke through 100, and sold and then sold some again, and then I haven't felt the desire to go back to it, to be honest. I'm quite glad I'm out of that mindset. It can distract you from what I'm good at is why I don't do it anymore. Okay, let's go to Mick, who's got CHN, Chalice Mining, and we've had that sort of a week, haven't we? Where stuff that was looking really good, it's just the hot money kind of has just calmed down. Is that the right word? Last week we looked at it. I want to say, well, if that's 20, then we looked at it on a 4, which is that candle there. And really all we had, Perry's give me a thumbs down because we're not in the right place. There we go. Now we're in the right place. Okay, so we've got to do CHN and just go back to where we looked at it last week, because I think it's important after a week that we've had to be able to say, well, why did we make such a decision? And it was on that candle there that we said, well, let's maintain our risk. And you're Nostradamus if you can say, well, that's unequivocally where you need to manage risk at that stage. And if you can say time and time again when you see that pattern that that's the time to manage risk, then and it turns out to go down, then full credit to you. You're smarter than me. But look, all I can do is say, well, I just don't have enough evidence to do so. Did we get any evidence during the week? That's a problem, isn't it? I mean, we've got a peak here, right? And now we have made a peak here. So if we look at that high, 259.5, and then we've got that high is 259. So we've got lower highs. We've certainly got lower lows. So it makes this a peak because this is higher highs and higher lows, right? So here and here, higher highs and higher lows, then lower highs, lower lows. So if you're hiking in the mountains and you're going uppity, 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 up, higher high, higher lows, and then you go lower high, lower low, and your next step you've looked back. Well, that was a peak, wasn't it? We call them points of supply. Peak is great for the imagination. Point of supply maybe less so, but I think more descriptive about what's going on. So that would be where you might change your mind. And I'm not saying you should have, because it's still pretty strong, isn't it? But we've got a problem. Certainly when that occurs, we then will pay more attention to this level here, right? So if we draw in our peaks and troughs, and I want to say there's one there, one there, one there, one there, one there, one there, and now we don't know where this one's going to end, but we do know it's formed. Okay, so it's this trough here, this point of demand that we then will peg. This is my model. You can do it any way you want. There should be nothing new that you're hearing here. So I've got a point of demand, and for me, I don't want to see it close beneath that point of demand because I've already got the lower peaks. I've got some candles at those points of supply, which are pretty nasty, right? So we for me, again, you do it any way you want. Absolutely must manage risk here. Now, what that means to you is, whatever it means to you. I'm looking at this and I'm thinking, because I've got multiple points of demand here, so there's one there, there's a couple there, there's one there. That isn't one, but it's a decent demand side shadow. I've got lower points of supply. I've got decent candles there. I think I'm going to go, let's go 2/3. Oh gosh, I completely stuffed that up. And we're going to go 2/3 there, not 1/3. And if you're not sure why I think that's the case, please send me a message. Say, Carl, I have no idea why you would think that way, but I think we'll probably be pretty close to agreeing on that one, won't we? And let's just keep it that simple rather than doing question marks and stuff, because I don't think we need to ask. I don't think we need to ask too many questions about that. Okay, and then we've got 1/3 left, and we certainly would be looking very closely at that short-term trend ribbon as a point of no return. Obviously, it's dynamic. That's the beauty of it. So it's going to keep, it's like a trailing stop loss, isn't it? It's like our trailing stop loss. So it was there on that day, it was there on that day, and then, kind of gets up to there. We didn't close beneath it today, so maybe you're still hanging on to that last third. I think after a day like that, if you tuned into this day here at 10 to 4 on Thursday afternoon, I don't think you'd wait, would you? I think you'd probably just knock a third on that day. And then here, you actually just tickled. It just tickled, didn't it? And here you would go. So, and that's kind of the market it's been. It's got a, in this really spec end, it's been sort of dancing with demand, for want of a better phrase. So I don't think there's any question here. We're minus 2/3. I've got a third left, and that's really your comment, Mick. You're saying minus 2/3 question mark or ZRP. And that last bit is up to you. I can't answer that for you, but I can show you, based upon my model, where that point of no return for that final amount of risk is. And it's there, and it's really close. And it didn't quite tip it today. So we'll see how that goes tomorrow. Okay. Yeah, frustrations. And you kind of get the feeling sometimes that, this will just take me out and then it's going to go straight back up again. But unfortunately, that if it does, it does. WBT is the next one coming up, if I can learn how to type. I don't know what's going on tonight. Far milder, but just as frustrating, isn't it? When it was looking absolutely amazing over here. But perhaps for us, because we have identified a bit of an area in the past, maybe not a surprise that, well, there you go. That's a level that you're going to have to do a little bit of work at. So not a surprise to see this. Maybe you're a little bit more aggressive there when you see the supply come in. Personally, I wouldn't have done anything. I'd just let this one ride a little bit. There's no points of demand. Just the ribbon here. We formed a little one here. I think you could use it, maybe being a little bit pedantic even, so I'm talking about that, because the trend ribbon is not far away. So we have a lower peak. Obviously, if you've got a trough, you've therefore got a peak. So just let you know what I'm looking at, so you can play along at home. We haven't closed beneath that yet. Yeah, look, depending on the candle. So let's say, I think let's respect the level just to get some risk out early. So we would say close below, and yep, I think that's the way I would go. I'm just telling you what I would do, right? You guys can use the model in your own way. And then obviously we're going to be more aggressive if it's a bigger candle. If it's a really terrible candle, there, you know what I'm talking about, what sort of candle that would look like. And then certainly beneath there, we would go or minus 2/3. It would just depend on the candles that saw us get there. I'm having a lot of trouble typing tonight. So where are we on this officially? I think we're at 2/3. If you're still full risk position, no complaints. Today's candle only tickled that low. So it's either FRP or 2/3. And no problems with either one. It actually really doesn't matter because we've got a roadmap out if we need it. Otherwise, it's very strong. What we're sure is the need to have some risk here. Okay, so the good thing is even if we're a little unsure as to whether we're FRP or 2/3, we are sure we need to have some risk here, and I think that says a lot because I think there's a lot of uncertainty out there at the moment. Lotus is another one which I don't know if it ended up getting in the list on this day. I can't recall. Some of you might know, but I did hold this back deliberately for a long time just because I know that it's a piece of junk. And I don't know anything about the company. I just know the chart. But anyway, I'm not going to try and tell you that I foresaw this plunge today, but there's a reason why it was. If it did it get in that day? I can't remember. It would have been the last uranium stock on the ASX to get into that list. So it's just mute now. This has negated decent volume on those last two candles. It just goes to show that the weight of actual proper positional selling, they just got truckloads of this stuff, and then there's just that speculative fervor was enough to overwhelm them, to just even for them to say, okay, well, let's just see where it goes, and then they get a sniff of it, and it's just let's just get back to doing what we know we're good at, which is selling the hell out of this thing. So just nullified, neutral, and I think the beauty of my model, and I'd have to go back and I'd have to check, did I give in? Did I just say, look, I just cannot ignore it any longer? So that's the 14th, the 10th, and let's go back here. And if the candle's the 14th, then it would have been the addition of the 15th. I need to scratch this itch, sorry. So 15th October, and let's go find Lotus. Oh shit! It did make it in. So you can see there, even I got to the point where I just couldn't ignore it. I ignored it on this day here. Ignored it all through there, and then succumbed there, even with that little shadow. It certainly did make feature. We can, if you don't believe me, we can go down and confirm that it was not in here as a feature. LM. There you go. So that's that we can say with confidence. But I'm not trying to distance myself from that call. Here's the point. Like, if you're following the model, like what you did was go plus 1/3 R or whatever your version of it is. And that's what you're losing on now. I think other people go buy, right? And whether they buy $1,000 on their typical trade or $5,000 or $10,000 on the typical trade. I've got an email from somebody today, not one of you, regular market index person, so I can talk about them because they'll never see this recording. And they said my typical buy amount is $5,000. I typically buy in $5,000 lots, and that is just crazy stuff. I mean, not that it's a big or small number. It's just that that's how I do it every time. It's like, well, for me, I need to build up to that, and I think that's why. That's a good way to do it. Okay, let's and if you got it, Mick, on that, you went a third on that day, then I'm flat. Okay, I'm flat here, so ZRP. There's no reason to participate in this. Hey, if it goes back up, I can do something about it, but you have to admit this was the last uranium stock to make the list, and I'm always a little bit shy on those. Okay, they're your three. Let's head over to the online requests and let's see how we're going. Hoozle says, hi, LMA gang. We were all so excited, weren't we, last week? And then we've got a few that haven't gone the right way this week. Nicholas saying, EL in the US, I will check that one when we do US ones. Robert's got MGR, so he's looking at the bright side of life because that's going pretty well. I put that in tonight, so certainly made the regular list. And I sat there, Robert, and I thought about it for, I reckon, a minute. And for me, a minute's a long time to look at a chart because I usually just know as to whether it was going to make feature or not. And I did this, and not to get a weekly signal, but just to see if there was anything really sort of sinister out there, because ultimately I know that MGR, it's a very rangy stock. It likes to range. And if we zoom out, you can see it is effectively traded in a range between 180 and 240 for 2 years, 3 years, 3 years. And so I zoomed out and I looked at that and I thought, okay, well, actually, here's a level, and let's run that across. And I know we're there, that's okay. But we're there with a good candle, we're there with some momentum. We're dealing with that supply. And then what's next? Okay, well, there's a little level there. I don't think that's the major one. I think this one's far more important up here. But if you were to link those together and go across, what does it look like? And this is the process I went through. We've got a bit of room there. And I think we'll find, well, 1-to-1 into that zone. Not being too pedantic, I think the top of that zone is more important than the bottom of that zone. So I said, okay, on that basis, it is a very strong chart compared to what was out there, and therefore I did run it as a feature, if only to get a third in and just to see how it goes from here. So I agree with you on that. Plus 1/3. And we saw the real estate index, didn't we? Also starting to look good. So it's always good to see that if the sector is running as well, and that is helpful. And we can see a nice little move here on the relative strength. One thing that maybe held me back is there was, if we need to deal with that supply, we're not really seeing it happen here, but maybe given today's close, maybe there's no supply there. That's why we didn't see the volume appear. Anyway, I gave it the benefit of the doubt. Let's keep moving. We're going to go to gear. Yes, that's I'm pretty sure that's the Australian one for plus 1/3 or minus 1/3. Okay, keeping our options open. No, I think it's more in the plus 1/3 camp. So geared Australian equities. Okay, well, it's going to look largely like the ASX 200, but maybe with some time decay, because it might be trading some options to do it. But I don't think we can look at this chart. I think this chart's actually irrelevant. So we wouldn't look at gear. The real question is how do you feel about the ASX 200? Because gear is not going to move as gear. It's going to move based upon what the ASX 200 does. So we'll have a quick look at that and reiterate that I'm pretty happy with that. So on that basis, if you're looking to track this with some gearing, then gear is one possible way to do it. Another possible way to do it is to buy a bunch of stocks in the ASX 200 which you think are going to beat it. And then we're going stock by stock. So it's not a no for me. It just depends on your style and what you're trying to achieve. And if you're happy to go that way, then no objections with adding risk. Obviously, if you've got risk on this, you would maintain that risk. In the meantime, let's go to... Who's also got volume indicator. What's the moving average length that I'm using? That would be, I'll hover over it. You can't see the hovers. I'm pretty sure it's 21. In fact, I can't see there, so let me find out for you. 63, 3 months. 63. Oh, what's the significance of 63, Carl? Well, there's typically 21 trading days in a month, so 63 is 3 months. And what we're looking for there is long-term enough to iron out those kinks, not so long enough that it doesn't respond to changes in volume. Volume changes, you go through bouts of higher and lower volume, so we want to have a little bit of sensitivity. And I find that 3 months works pretty well in that regard. So it's the same for the OTR and it's the same for the volume there. You can see, in fact, the RSC is not coincidentally also 63. I like that sort of 3 month look back period. It suits my style of trading. Hey, if we're on a weekly chart, we're now 63 months, which is just over a year as well. Again, it's sort of medium term. Let's go to Perry. Perry's got CUF, which I think looks fantastic. Went in a couple of nights ago. I want to say it went in on this night here. And if that was a a Monday, Perry. I'm sure you would have given it to me on that day as well. But not a Monday, I think that's a Tuesday. And yeah, look, it's done the right thing since then, which is great. If you got in, you probably got in more like 3 cents, but I had a plus an add risk on that day as well. And I've also got an add risk on this day too. So let's just go plus R, just to, I think, please don't make me type 1/3 anymore. Can we just do that? Plus R, minus R, plus add risk, minus risk. And I'm going to think, what can I do for equals risk? How about that? What do we go? Equals risk. So maintain risk, add risk. There you go. The old dog can learn a few new tricks. It's just we're adding, we're maintaining, or we're reducing. So adding on this one, let's go to SGP, which is in the same boat. That is add risk and plus R, or maintain risk. If you've got it, maintain risk or add risk. Whatever is more appropriate for you. There you go. Also here would be a plus R. And that's the first two, I think. I don't think there was one before that. I think this is all a bit... I still need proof through here. Maybe there would have been the last time before that. So, yep, I like that one. And we saw that real estate sector index starting to look quite firm. So MGR and SGP in that same group. And LDX is the final one. And this is also a feature chart for tonight. If you don't believe me, these are tonight's features. I know they're going under my head. But let's go through them. And I'll come back to LDX at the end. I'll come back to LDX when we get there. But Arafura, vertical, shallow pullback. Look how shallow that pullback that was. And then going again. Oh, look, I'm not too worried about 50 cents because it's not the first time it's been here. Aurora, a little bit more slow and steady. In fact, now I'm thinking that's probably just a normal uptrends scan list rather than a feature. But it's in there anyway. Asia, I still think very good. No problems there. AYA is impeccable. It's just, this thing just doesn't know what the meaning of the word pullback is. B4P, it did pull back, but hit that short-term trend ribbon pretty well. CBA, a little bit controversial. It sold me the dummy 2 times. I must admit, I probably was being aggressive here. And then I think maybe there most recently. Or maybe was it here and here? I can't say. I can't remember. In fact, I don't think it was either of those. I think it was that one, certainly. And then I think maybe down here somewhere. Maybe down there. The other 2 times that I've run it. Blasphemy. I've run it as a short-term trend. But I just think the market is generally so bearish on this thing because it's quite overvalued, that if it can't go down, and you'll see this time and time again, if it can't go down, it just has to go up. If it can't go down, it has to go up because there's a reason why it couldn't go down. It's just that the funds are just buying the crap out of it. You've got value investors selling it or trying to short it. This is the other thing. They're trying to short this thing because it makes it. Can you imagine how much it would stroke their egos for this? Because it's going down. So I think, okay, finally, this is going down. I'm going to short it. This is going to be my big hedge for my portfolio, right? For my value investing portfolio of junk like tertiary wine estate. And it doesn't go down. It doesn't go down. And then they're all short and it starts to go back up. Wouldn't that just be poetic justice? So I think that's very interesting. CCL, obvious one. COG, obvious one. CUF, which we've talked about. Thanks, Perry. Downer, very good. Let's go zoom normal here. I think it's important to kind of get a bit of perspective on some of these. There's our emerging markets ex-China. emerging markets going berserk. There's Hastings, so sort of hitting that old supply zone, now acting as a demand zone, popping through. Look, $1 there, but again, it's not our first rodeo at $1. Another emerging markets ETF, and I'm not looking for diversification here. I'm literally just setups. So I'm not trying to curate your portfolio. I'm just showing you setups. And then we talked about Lumos Diagnostics, which is definitely a plus R for me. I'm liking this plus R business now. I'm going to keep doing it. Plus R, or if you've got it, obviously equals R, is also on the agenda. And I don't think I need to tell you where you'd get out, do I? I think that's all pretty obvious. Lindian, I think just if it can't. That's the thing. If it can't pull the other, like if it can't go down, it'll go up. But if it can't pull back, like if it can't even pull back, what does that tell you? Made it, big white candle. Mirvac, that's the one I had to think for a minute on. I actually spent a bit of time thinking about this one, just with that little shadow here. And it's it's consolidation, but no, I think it's breaking out. And then I thought, no, happy to go with that one. PAX, obvious, didn't have to think about that. Rio, I just like again, if that's how you pull back, these two matching white candles, this white, that's a good sign as well. RSG, again, if you pull back with that sort of a candle, that's obvious. Sandfire, just more of a specky little, just pop a little risk on there on that pullback, touching the ribbon. Lynas could have gone in. I didn't come up in my scan, and obviously something tripped it. One of my rules, one of my filters. It might have just been on the basis of down. No, something. It's even. What's up on the day? Proximity, number of black count. Look, there's something in my scan there that it tripped it. But just eyeballing this, I reckon that should have got in. But I didn't fight it because I'm not going to fight my criteria. But I digress. We were talking about today's feature setups. Stockland, Perry gave us that one. SHN, go back to Zoom normal. And I don't want to steal anybody's thunder for this evening, but just looking at some of these candles, and that's got a lot of stuff going on there, isn't it? Oh, would you? Well, we want to see some of this other stuff. Anyway, look, if we got that candle, if we get that arrow, next supply, I don't even know. Minus a third there, minus a third there. If it gets beneath here, we're going to minus a third. So we would have got back, would have taken some profits and then kicking back in. I think that's an ad risk day. That's an ad risk day, and today's an ad risk day as well. So just getting back in, and that's going to happen. We don't know what's going to happen next. So sometimes we have to get back in. We make our best call based upon the evidence we can see, and then we get on with our lives. Life's too short to dwell on this stuff. And that's the list for tomorrow. Let's look at the shorts while we're here. 3DA, and these should be the exact inverse opposite of those charts we just saw. And if I was going to hedge, this is how I'd be hedging. I'd be hedging through these, or aggressive, and that's why I do favour those aggressive ones on those big blue chips like this. Nice little segue, because it's just correlations. This stuff's going down anyway, but it's not going down because of the market. It's going down because it's crap. Okay, so crap. Look, it's crap, but it's in the basket, right? So it's in the ASX. I want to say it's in the ASX top 50. It might even be the top 20. So you can guarantee that if the market tanks, taking the rest of your stuff with it, this should go down. Whereas this stuff might not go down. It's going down on its own accord. It's not going down because of the market. That's the difference. So that's why I look at something like CBA. REA is a recent one, and I'll be far more aggressive on those, especially if they're turnaround setups, because of the correlation they have to the ASX 200, and therefore don't forget that's our benchmark index. And if it peels off, I'm actually going to get some proper hedging through it compared to, say, if I'm on these. I mean, these are more positional, but that's more hedging. Give me a thumbs up if you understand what I just said to you, or give me a thumbs down if you want me to explain it again. Okay, I think a few people getting that. That's good. Okay. There's short setups and then there's short setups. So there's short setups where we just think it's going down, but then there's short setups which we think are more likely to hedge our portfolio out. So not BOE. BOE's, the ASX 200 goes up, the ASX 200 goes down. That's irrelevant for this thing, right? Even that one, they were in downtrends before. But the stuff that's starting to roll, that's the interesting stuff. Actually, that one is probably falling into that basket. That one's not. That's already going down. That one's already going down. That one's already going down. So they're less hedges. Kogan's already going down. Myers already going down. Like what piles of junk these things are, that's not going to be it, and that's already a pile of junk. So really just Aristocrat in that. But I want to go back and, so they were the feature ones, and there was a bigger list there, which I don't have access to now. But something like Xero, I think, would fall into that category. WiseTech would also fall into that category. I spoke about REA before. Some of those insurance companies like QBE, so they're not in tonight's feature list because it's got a white candle, so it's just not in tonight. But we know if it rolls over, throws in an upper shadow and a black candle, they'll be back in that list. So we're talking about hedging here. Super interesting. And yeah, I think I kind of like talking about this stuff more than, just, oh, that's going up, or the plus R, minus R. I think this is the really interesting stuff we don't talk about enough, perhaps. But this is not a comprehensive trading course, is it? So, but I did have a chat today with somebody at Market Index, and I've got so many courses just sitting on my OneDrive here about maybe doing some more stuff through Market Index. So we'll see how that goes. Yeah, look, I think there's definitely some good stuff we can do. Let's go to the next one. I'm just trying to find my place. I'm sorry. GBZ is where we are. GBZ. This is regrettable, isn't it, Daniel? Goldie, you've gone ZRP, fully out to date. Look, I think that's the right decision. Yep. You know what it's going to do tomorrow, right? It's going to be 6 cents tomorrow. Yes, are you doing it right? You are doing it right. Is it going to be 6 cents tomorrow? Yes, it's going to be 6 cents tomorrow. No, we don't know. But no, I think there's everything there is correct, because for me, I'm looking here. I don't like that, whether you go on that day or not. And we can't look at what's happened. We need to go back. We need to say, well, how do you feel about that? Because we feel differently about that day, don't we, compared to that day. So this day here, I think it's still a bit 50-50 line ball. I don't know. What do you guys reckon? Would you pull the trigger on a third there? I mean, let's say hypothetically, you guys know my model. Let's say you plus art there, you plus art here, you plus art here, you plus art here, and let's say your max limit is 6 of these. What is your max limit? Have you thought about that? Is it 8? Where do you cap out? And you should cap out somewhere. I think somewhere between 6 and 8 is reasonable. So let's go 1, 2, 3, 4, 5, 6. Let's say 6 was yours. So forget these two. Was there a reason to get out before that? No. 100% zero. There's absolutely nothing here. There's all respecting, nothing sinister. They're minuscule black candles. So we're in with our full load here by this day. And we're looking at this now. How do we feel? What do you feel? What's your thoughts? Thumbs up, hold. Thumbs down, minus R. 1 thumb up, 2 thumbs up, 3 thumbs up, and about 50 thumbs down. Okay, and that's interesting. What would I do? I think I'm leaning with the thumbs down, but only just. And maybe it's half of a normal R. But I think we need to just take some off the table on that day. And there's absolutely no harm in doing so on that day. And what's the worst that happens, right? And that's it. That's what you always have to tell us. What's the worst that happens? It goes back up again. Well, it means I've still got 5 of these. Now, you've got 2 options here. You can either go minus 1R. Some people like to do that. Some people on the exits like to go a little bit more aggressive and because you know my method of thirds, right? So what's a third of 6? A third of 6 is 2. Okay, so this is where me writing a third makes more sense than just minus R. Let's just leave it at minus R because we're signifying that we would manage some risk there. Okay, but I would be thinking of two of those entries, so a third of what we have in total, as a standard exit, full stop, go to the next sentence, and at least a 6 in this case, or 1R. But we're not going to do 1s or 2Rs. We're just going to go minus R or plus R. What about that day there? You don't have to do thumbs up or thumbs down, but clearly this day should concern us more than the previous day. Is that fair to say? You can do thumbs up, thumbs down if you want. That's the key day. That's the kicker day. Like, that's the really important day. I'm looking over to see if anybody, you think nobody's done it, but do you agree? Do you at least agree on that? Like, that's actually that day's more important than the first two, because this is the day we tried to rally, and then what happened? We got beaten back down. So that's the really interesting day. I would say that if you didn't go on this day, if you didn't go on this day, if you didn't go on this day, then 100% you have to go on that day. If you did go on this day, if you want to go on that day, knock yourself out, right? What's the worst that can happen? I think it's a sensible thing to do. This day we wouldn't do anything. We'd be thinking, if we knocked off two bits, we'd probably thinking, you know what, I'm feeling good. I'm pretty good right now. I think I'm in the right place. Okay. Thumbs up, thumbs down. Is there any confusion here? I shouldn't see a thumbs up. Like there's no confusion. We know that this is without a doubt a minus hard day. This one here is do not pass go, do not click. Like, what are you waiting for after this? You're waiting for it to get beneath here? No. It's like, you could not get 5 better, more easier candles to read than that. Or would you almost go another one on that day? I think you would, actually. I think we're going here. I don't know. Give me a horror face emoji or something if you're horrified by this prospect of here, and here. What have we knocked off? You're almost. I mean, if you're doing thirds, you're ZRP. If you're doing less than thirds, you might still have a bit of risk left, and you might just say, look, at this point here, emotionally, forget money. Emotionally, I'm done with this trade. All right, that could mean two things: keeping just one of those R's on it, just for shits and giggles to see what happens. Because if it goes back up, you'll be glad you did. If it goes down, you're not going to give a shit, because you've nailed this. You've nailed this trade. As a trend follower, you've got out so close to the top. If this collapses from here, you've got it so close to the top, you've nailed it. If you hold on to 1/3 for a bit longer, like you'll give it to the short-term trend review, but so it's a ZRP or just a bit left on, okay? And then what have we got next? There you go. Now, this is a pretty good case study, let's face it. Like, I couldn't have asked for a better case study for my model than that one. But I think it's, nonetheless illustrative of how we would think here. So to answer to respond to your comment, who was it that said this to me? Daniel. ZRP out fully today. Am I doing this right? And I think you've absolutely nailed it. Well, yes. If that was your last, there you go. If that was your last R, like if you'd got some out before this, and this was your last R, then you're doing it right. If you waited all to today, then I think, no, you probably left it a bit late. Let's go to USL, which is your next one, and see if that's similarly interesting. And this one actually doesn't look anywhere near as bad as that one. And even today, we've got a lower shadow here. But I do think we've got a pretty clear point of no return. Like, we can't have it close beneath there. It just couldn't be bothered. I was going to say, look, I just can't make a case for having risk. I just couldn't be bothered having risk on it beneath there. I just think it'd just be in the too hard basket. Let's go to next one on the list. I should just have these I should highlight these. There we go. SNG. Let's go your SNG. Yeah, look, certainly 100%. Yesterday's I should say Friday. So that's nothing. That's nothing there. So that one is nothing at all. If you did it on that day, I don't agree with you. If you did it on that day, you look like a genius, but I still don't agree with you. If you did it on that day, you were right, but I still don't agree with you. because if we go back to that day, I just don't think there was enough of a reason to do it. Okay, it's not a great candle. Like, we're not blind. We can see there's supply there. We can see it closed on the low, above average volume, but nothing like some of these other big days. But I just think it's just too premature. Okay, and that day's fine. And that day's fine. I mean, like, if you had to say out of 10, the candle that's coming next, we're thinking more like one of these two, or at least like that or that, aren't we? Than anything like that. Okay, what did we get? We got that. Okay, 6 out of 10, 7 out of 10. We would have said a good one. That still leaves 3 or 4 out of 10 for that one, doesn't it? So it's all in the realms of possibility. But when we get that, no, I think we've got to go now. We have no choice but to manage some risk on this one. At a third, at least a third. If you went 2, I wouldn't complain. And today, if you knocked out another, I wouldn't complain. But I still think a little bit of risk on the table is okay here as well. Okay, and it's just one of those. Yeah, it's super hot, then it's not super hot. What can you do? Okay, thanks for those 3, Daniel. Very instructive, I think, for all of us. Let's go to who's answering your own question. You're quite correct. Let's go to Hayden RXL, which, okay, I think we're all going to be, in agreement here. No, nearly plus, but I just think as a precautionary measure, that's all it is. Let's just knock. I think we've got a reason to do it. We've got 2 above average volume days as well, looking there and looking here. And we're going to go precautionary measure. We've closed beneath that trough. I mean, there's plenty of reasons to do it. Did we close? Maybe we did. Haven't closed beneath that trough. Okay, next level's here. Depending on the candle, we might end up ZRP if it was to close down there. But we're at minus R. Okay, we're managing our risk. Let's go to Peter. Peter's got KAU, which thankfully, they're not all terrible, are they? That one still looks fantastic. Certainly made the general list today. Obviously, it didn't make the feature list. Wasn't far off it, just that little shadow at the top. Maybe that's just me being a little bit pedantic. Otherwise, look, it could have featured with many of those other ones quite easily. So this one's very obvious. If you have it, more than happy to maintain your risk. If you don't have it, then happy to consider it for adding risk. FFM, still fine. I'm not going to ask for thumbs, but nobody should give me a thumbs down yet. I mean, and again, unless you're Nostradamus, you cannot tell me that this is supply. And what we're doing is we're saying, is there supply side control? You cannot tell me with absolute confidence that there's supply side control. And therefore, what are we doing? We're adding risk, we're maintaining risk. I think we're certainly maintaining risk. I don't think that is at all up for debate. And the question is, where do we add risk? We're going to go plus R on the next demand side candle. Okay, I still think we're able to do that when that occurs. And we're going to go to RML, which is not that one, it's that one, and that one's fine. Certainly maintaining risk. Not adding risk, I think, today, just on that candle because of the upper shadow, doesn't require it. But whether we're adding, if we're maintaining risk, there's no question, and there's certainly no question that whether we're reducing risk, because that's off the table. Okay, and Peter, if they're your 3, mate, you have dodged every bullet that was fired at you over the last week. If they're the 3 you've got, well done. Marcus has got, okay, I'll hope you're well. I am well. What are your thoughts on Zip? Oh, that's it. That is an interesting candle today. Like, what do you make of that candle? All pretty benign through here, I think, aren't they? They're small candles. I know there's some black ones, but they're really benign. And then today pops up and gets beaten back down, but still has a lower shadow. I'm not sure what to make of that. I'm a little bit stumped. It's certainly not clear demand side control. It smacks more of supply side control, of supply sort of coming in, targeting the rally, so selling into the rally, but also still of the demand that was required to get it there in the first place. We've got, I think, substantially above average volume. So lots of demand, lots of supply, and then a bit of demand at the end. Look, certainly what we can do is say, well, the supply is concerning enough to start to peg some areas where we would have to manage our risk. Like, the supply has got me on notice here, or it's got me putting zip on notice, let's say, because we've still got short and long-term uptrends, no problems. But we would certainly target an area like this to minus R. I'm so glad I'm not typing in -1/3 anymore, and I'm just doing that. My life is easier. But for now, I think we're still equals R. But this one's, it's on alert, something to certainly watch very closely. Let's go to, that one was Marcus. Went up, so had results today, had some news. Now that's making a bit more sense, doesn't it? It went up, got sold off. Okay, AFG, which is that one. I'm guessing maybe also some news today. So that one I would have been ZRP before today, because it's just done everything to get that way, hasn't it? And it's miraculously rescued by something. I don't think I'm adding risk yet, and the reason is we've probably got a pretty decent supply side barrier, even between there and there. So I'm picking that peak and that peak, and if we go across, I think it's going to take some work. I mean, quite a bit of volume there, quite a bit there, quite a bit there on each of those, as in, demand chugging in, and supply going smack, smack, smack each time, like waiting for them. Actually, well, that's not true, is it? Because they're good candles. That would be the case here. But it's not the case here. This is supply removal. So no, I'm sorry, I misspoke. This is removing some of that supply. So it's interesting then, really, that it kind of gave up so easily through here. Back today, not huge volume. Long story short, it's no, not yet for me. It's something that would have my attention. I love big white candles, but the price action would need to fix itself. So we need to see any sort of pullback, hopefully a very shallow one, and then just a push back up again, move us back into higher peaks and higher troughs, just to prove to me that the supply side response that eventually comes is shallow, it's minimal, and it's met with lots of demand. That would be a shallow pullback, and then that's going to give you more confidence that we can again go and battle with the supply up here. So call it conservative, yep, but that's my view there. I can't stop you from jumping on that white candle. You're probably going to be okay, but it's just not what I'm going to try and find something that's a higher quality, just ready to go, rather than sort of needing a bit more confirmation in my mind. In fact, you've also identified there, should I wait for another, next demand side candle? So that's more my thinking. CMP, which is, I was going to say Camplify, but no, it's not Camplify. Compumetics, I really like this chart. Let's zoom to normal. Now, it's super sketch, which means it's super liquid. I haven't seen it. You can see here I haven't seen it because the liquidity filter hasn't been met. But it doesn't mean you can't trade it. Sometimes these little super sketchies can really move because they're not that liquid. There's not that much supply in the way. But we still want to see some interest, right? So, yeah, we've got some volume coming in there. All of 500,000 shares a day on a 40-cent stock. So stuff all, 3/4 of stuff all. It's pretty borderline on that. But that makes up for it. So nice big range that we're breaking out of. A little bit of supply up here. We'll talk about that in a second after we talk about just how steep this rally is. Okay, so what we like is this, the steepness of this and the shallowness of this, which is a perfect little, segue from that last comment on AFG, where we said, I want to see how the supply side responds. So here we bashed into the top of that supply zone. We want to see how the supply side responds. Did it respond with a lot of supply? How did the demand side respond to them? Shallow pullbacks are the best, and then up we go. Today's the confirmation candle. Today's the get involved candle. So it's certainly plus R for me, no question about that. Happy to maintain risk if you happen to already have it, of course. And this is the only impediment in the way. Let me zoom out, see if there are other impediments. In fact, probably best way to do that is go normal and then go weekly. It's just cleaner, isn't it? You don't have to zoom in, you don't have to zoom out. It does it for you. We're not making any decisions based upon this weekly chart. We're just simply using it as a quick way to zoom. Obviously, we're going to have a little bit here and then a bit up here. And then the rest I wouldn't worry about. So if we go here, miles away, irrelevant, and here, more relevant. Sorry, need to click on it. Eventually it will work for me. There we go. And that is really the only question mark I have over this. Okay, so if we go back to the daily chart, we're getting close to that. And it comes down to whether you want to have a crack at that, right, in advance of that. Given everything else, I'm happy to give it a go. What are we talking about? Adding a bit of risk to it and seeing what happens. So it's a yes for me. Thank you for bringing that one to my attention. We're going to keep going. Please, Matthew's our last one tonight because we are getting quite advanced on time. David Scott, hi Carl, missed the start, but asking about copper as a long-term theme and short-term down. What does that mean, long-term theme? The long-term trend certainly on the LME looks good. So there. What did happen? What did I do there? Zoomed. I zoomed all. That wasn't my intent. But while we're here, let's make the most of it. That's the monthly chart for copper, looking at all the history I have, which goes all the way back to 1995, over 30 years of London Metals Exchange history. And it's looking pretty darn good there, isn't it? In terms, like that's a big base pattern now. It's multi-year, 5 years of basing, pushing up towards the top of that range, trying. Clearly there's some supply up there. Like there's a decent whack of supply in that 10.5 to 11. Traders have become accustomed to selling there and actually getting a good result out of that. But we look to be trading with that supply and working through it. But, you look at something like this, it's not a lock, it's not a guarantee that you do that sort of base pattern and break up. Look, it collapsed there. It took a GFC to do it, by the way. This is where the Chinese economy started to falter and we had a European debt crisis. I don't know if you remember. This was also weakness in the Chinese economy, a bit of a Trump 1.0 as well. Oh, all the memories, ladies and gentlemen. This was COVID, of course, the run-up, and then actually the post-COVID blues. And then here we are in 2025. How did I start talking about this? David was asking about long-term themes in copper. Well, I think I've addressed your question on that, haven't I? They're your long-term themes. If we go to the daily chart, look, I think in the short term, it looks just fine, and there's nothing too sinister going in there. So, look, I don't mind copper as the theme, if that's the question. Now, your next part is specifically CSC, so we can look at that chart here, and it has pulled back, and you have to expect me to say stuff like, well, I don't really care what copper's doing. I'm going to trade this like I need to trade this. And I think we got a bit of hot money coming in and a bit of hot money coming out, and a lot of us have experienced that. So how would we have traded it? Well, there's peaks and troughs coming in here, and there's really nothing in there, is there? There's very little in terms of candles because this is a Canadian stock. It trades in Canada, and then it updates here the next day. So you're not really getting actual proper candles you can analyse here. You're getting reactions to where the price is over there. You're better off looking at the CSC chart over there. But for what it's worth, there's so little you could have done about this. Oh, that's a lower peak on that day. That took out that day here, but it wasn't a horrific candle, so maybe that's your first minus R there. And then this day here, what do? I don't even know. Minus R, and then today you didn't close beneath the short-term, like your last R is beneath the short-term trend ribbon. So I think you're still running a plus R position here, and you're just seeing how you go, and probably beneath here is your point of no return. That would be your final R. Now that might be completely at odds with this idea of, well, I think copper's a long-term theme, so why would I be selling CSC? Well, that's because we're on a daily chart. That's what I look at. If you went to a weekly chart, you'd get a completely different picture. So maybe you need to be looking at a weekly chart. I'm not going to bother, but I think you can do that analysis yourself, and maybe we'll look at CSC when we get to the US stocks, which are not far away. Does strong long-term theme change how quickly to reduce risk? No, I don't care about long-term themes, mate. I just care about what I need to do on here on these charts. I'm not gonna confuse myself with narratives that are going to cause me to hold on to stuff way too long. Not this little black duck, David. Been there, done that. Let's go to Perry. He's got US stocks. We're going to be there in just a second, I think. Still, I think a hedging case study would be good value. Yeah, we kind of did that, I think. Didn't we, Roscoe? Kind of did that. Looking forward to the course. Oh, no, I've overpromised. And at risk of under-delivering. You might say, Carl, why don't we start doing one on Monday nights? I don't know. I don't know if I want to commit that sort of time, to be honest with you. My wife wouldn't let me commit that much time. She's not very happy about me doing these on Monday as it is. And for me, these Monday night sessions are sacred. You could say, oh, Carl, we'll pay a fee or something like that. And for me, these Monday night sessions are sacred. I don't want to. I know some people are saying, yes, we'll happily pay, and I know you would, but I don't want to do that here because I wouldn't feel right about it. But my time is at a premium. I've got 2 young children. I've got a wife. I've got all sorts of commitments in life. And as much as I love you all, I'm sorry, but I don't love you enough to run that sort of thing here. It's just turn up. I don't have to be prepared. It's very relaxed. We have a bit of fun, I hope. You learn a few things. I enjoy teaching you some stuff that's in my head, and that's all it is. So if we do it through Market Index, then they can handle all of the hassles of setting up websites, of building the content into things with whiz-bang user interfaces and things like that. I'm happy to supply them with the content because I've got it all. And then you can pay them, and I might get something out of that. But that's probably, and then I can tell my wife, hey, look, there's something in it, and it was all done during my day job period. If you get where I'm going, so so we can all be clear and upfront on why that's the case. Hopefully that's okay with you. Alkane, we've got some problems here. I think here is the level. I hope you agree. I don't think we can go any further past that, and I think that's too far. We've got a bit of a false breakout here, so this candle is disturbing, and then we've got 4 after it, a little bit of a gap today. The fact we've got this shadow here is good, even if it's only because it solidifies this area here as the point of no return. And it's an odd one because unless you maybe did 1R here, just on that 4th candle being literally the 4th one in a row, time stop, frustration stop, whatever it is, that would be the most you would have done up to this point. And yet we're going, well, that's kind of where we don't want to be involved anymore. And that's a little bit of an odd one. But for me, I'm going to time stop myself out of it at that point there because I think we can go find some better stuff to do. That's all. It's frustrating often when we don't get these really clear-cut signals. We did that, was it GBM example, and it was just so obvious, wasn't it? We don't get those all the time. Matthew saying, hi Carl, good to see you. Thoughts are in the US, we're going to go there now. Last one is from Matthew. Hi Carl, I know you would have been through this, but how do I get an invite to Wednesday night? There is no Wednesday night, but there is a Wednesday at lunchtime, and that is run through Market Index. It's simply what we do here, but in a far more sterile environment. There's no cursing, there's no swearing, there's really no interaction, and it's really basic stuff. I can't see myself ever teaching them even close to what we do here on Monday nights. You're welcome to join. Go to any of my evening wraps. There's a link to register there to the Zoom session, or any of my Chart Watch articles. There's a link there. So that's Wednesday during the day. And if you can't make it at 12 o'clock on Wednesday Sydney time, it's recorded and put up to the Market Index YouTube site. Ross has got to go because it's late over there. I get you too. Who's saying thanks to Mrs. Capolinga and family for this. Absolutely. That's fine. I will pass on your regards. Thanks, Hoozle. Jackie also saying thank you very much. We better do US stocks because I'm losing my audience here. So let's go over to the browser and browser window. There we go. And finish us off. We're going to head back up the list. And we're going to do, Matthew's got HUT, Hut Corp, I'm guessing. Look, it looks good, Matt. I'm guessing you're on it and you're probably thinking, what stage? Manage risk, full risk, take risk. I think we're okay here. I think we're still okay. Look, these two together, they're not great. they're not nice. They're frustrating. But everything else is still pretty darn good. So if you were so nervous, minus 1 unit of risk, still certainly for me, holding the other 2/3. As if you didn't have it and you're looking to, this is a first time opportunity, then I think it needs a little bit of work because these are quite powerful. Okay, that combination tells me there's a bit of supply. I know there's supply that came in. It's not we tried to clear it. We tried to trade with it. The demand side was in there, but we can tell that there was quite a lot of supply that nailed them. That sell the rally stuff. So I need to see, I'd say at least a dink even. So coming back up into 52, shallow dink, and that's the next couple of candles from there to add risk. So just to summarise, if you've got it, I think you can maintain, say, sort of a 2/3 risk position. I don't think I could be FRP from here, just as a purely precautionary measure. And if I didn't have it, then I'm still waiting for at least a dink and some nice candles to add risk to that one. Let's go to, actually similar to Firefly, he's saying, yes. Let's go in, no, that's different. NDIA, plus 1/3. Okay, I think I missed one there for you. George, NDIA, India. Okay, so let's go back here. I want to do George's India. Got to be quite interesting, I think. NDIA, which is indeed that one. Let's make sure we zoom normal, and there we are. Okay, look, I think, yeah, look, I mean, the big problem, of course, is the sketchiness of what we're seeing. ETF, thin ETF, okay, market-made product, and I think maybe the market makers are just, I don't know, not doing their job as good as they could, or when you get these black candles, it's just, somebody gets out, this is a really wide spread, and you get a black candle. So that would be the first thing that would concern me a little bit. The other thing is obviously it's very range bound, and we're probably not talking about the right thing because we really, I think, need to be discussing. Okay, there's kind of no point discussing that, so that's good. We're going to head back to the browser, and then I'm going to show you. Actually, I think I have it here, don't I? I have it in my macro. Actually, I don't. I'll go back here. Sorry for this, everybody. I'm just trying to remember where my Indian market is, and it's there, the Nifty 50. Well, okay, see, now that's even more confusing now. So what the hell's going on with the NDIA ETF? Why isn't that responding to this? That is weird, and that gives me some cause for concern that there might not be, that it might not be the best instrument to trade what you're seeing on screen. Because what we're seeing on screen actually looks very good. It's a clear demand side market. It's a clear add risk scenario. So absolutely, if you're asking me, should I be adding risk to the Indian market? I believe so. But we then have to question whether NDIA is the best instrument to do so. Because why does it look so bad when the Indian market looks so good? What's wrong with the way this ETF is structured? Are they using derivative instruments, potentially with a time decay element, that are causing this to not actually go up, even though the underlying index is going up? I don't know how it works. I would just put to you that there might be a better way to do it. And we did look at some of those. They're certainly more broad, but they did make the scan list, and something like an emerging index ex-China is going to have a large exposure, work it out, to India, but also South Korea, which is booming, but also Japan, which is booming. So I don't know. I can't say that this is the same, but it would have an element of Indian shares in them, and you're getting the benefit of some of those other markets. So apologies if I can't give you a better result on that, George. It just doesn't make sense to me. Not everything will. Let's go back to here and finish off these US stocks, and just CSC while I'm scrolling up the list. Because we talked about looking at that on the Toronto Stock Exchange. Capstone Copper, AXX. Well, maybe we need to look for Capstone Copper, TSX. There we go. So it's actually just CS. That's why it didn't come up. Okay, well, that looks worse, doesn't it? So that confirms what I said for the Aussie one, which is can't really justify holding a full risk position. We said there was a third left, and I can just, if I squint very tightly, maybe agree with that here. Let's go to Perry's got his US stocks now. NGG, National Grid, looks very good. Nice base pattern. Just going to head out to the weekly chart to see what's lurking out there. And there's nothing. Let me go zoom normal here, which is that. Looks even better there. So no complaints. And yeah, just impeccable. Great move to the top of the range. Shallow pullback. Good candles through. Clean, clean, clean. Just moving to a relative strength win here, which is interesting. I thought it would have. I guess that's a bit sideways, isn't it? And the Nasdaq was rising. So no, it's perfect. No complaints at all. We got plus R here, or if you've got it already, obviously equal. Very happy with that one. Click save. We're going to go to Perry's second one, which is ENSG, which is the Ensign Group. And that's good. And go to weekly chart, even better. Back to the daily chart. It's perfect. There's 10 out of 10. There's nothing on there that I don't like. I know that's double negative. The other way to state that would be there's everything here that I do like. Maybe 200's a little bit closer than I'd like. Bit of a round number, but not enough to stop me from adding risk to that one. Let's go to Perry's third one, and we've got ROIV, which is Roivant Sciences. Just checking on the weekly chart to see if there's anything out the corner of the eye there. A little bit here, but as crazy and dirty data-ish that looks, I think we're clear and above it. And once again, very, very strong. A little bit more extended, perhaps, maybe slightly more uncoiled spring versus coiled spring, the other two, but that is very, very slight criticism, if you could call it criticism at all. It's just pointing. It's just an observation. Maintaining risk, and certainly happy to add risk there. No complaints at all. Three very, very strong setups, once again, from Perry. Thank you, Perry. Let's keep moving. We're not far away now, and we've got I think we're pretty close. And there was Nicola with EL, and that'll be our last one tonight, which is Estee Lauder. Okay, I was going to say Eli Lilly is LLY, I think. Oh, I like this one. I like this one as much as any of Perry's. And you might say, well, the colour of it doesn't make any sense because this is not bottom left, top right. It's actually got a few black candles in there. It does, but it's a turnaround setup. And it's giving us a little bit of diversification. They will tend to move slightly differently. And I like it for that fact. So as a turnaround setup, yes, and as what it gives us in terms of diversification, yes, we look at the weekly chart, we're actually through that, that's important, we're through that, that's important, and there's really nothing now, I think, until we get to sort of 155, certainly 150, and that means we've this idea of at least one-to-one reward to risk is very, very easy to make. Look, the only black mark against its name is literally a black mark against its name, that candle there, because I go, well, why were they so desperate to get on that day? And that would be it. It came back from that very quickly. But that's the only thing that would just take it down from like a 10 out of 10 turnaround set up to like a 9 out of 10. And that's it. Because it sort of just ruined the price action a little bit as well. It's not just the candle with the price. So it's lost 2.5 points for that. But 9 out of 10 is still pretty good, isn't it? So it's a yes for me. If you've got the risk in there already, happy to keep it. And if you're looking to add risk, then I think this is a really nice turnaround setup. And I'll just scroll down to the bottom and make sure I haven't missed anything. And it doesn't look like I have. So let us adjourn for the evening. In fact, I need to go here and quickly do. I know you've heard the disclaimer 1,000 times, so I'll do it quickly. It's all general advice. You should consider it carefully. Seek the help of a financial professional if you need it. You could lose money. We just have to get over that shit and get on with the shit that we have to do. You're responsible for the stuff you do, not I. And we're back here and we're saying thanks everybody for joining me tonight. Hopefully you had fun. I did. Hopefully you learned a lot, and I appreciate all of your inputs on a Monday night. It really does make for an enjoyable experience for me as well. All the best for your trading and investing until we catch up again. Bye-bye for now.